Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm continuing the problems on capital and revenue expenditure. Last video 20 short questions and MCQs I have explained. Now this video is the continuation of the last video. So don't join now. If you want the complete command first video, theory video, you watch. You watch the first theory video where I have explained you in detail regarding what is capital expenditure, what is revenue expenditure, why distinction is required, what is the impact of this capital expenditure and revenue expenditure on income statement and statement of financial position. If wrong treatment is done, what will the effect on income statement and statement of financial position? All these things I have explained with examples in the first video. So now I'm continuing the 21st problem onwards. But before that, I expect my viewers to have a printout of the problems which I have given in the link under my description. Without problems, you cannot understand this. So my suggestion, always keep ready the problems before start watching the video. Take a screenshot of the solutions from 21st problem onwards. Then I'll explain all the questions. Come on, see the 21st problem. Nicholas is a baker. Which item would be a capital receipt? 4 answers are given. Which answer is right? You have to find out MCQ. So Nicholas is a baker and 4 items are given and we have to decide which item is a capital receipt item. Which item is a capital receipt? First one, cash received from the sale of bread. He is a baker. He will sell the bread. So cash received on the sale of bread is a revenue receipt, not a capital receipt. Second, a check received from the sale of an oven. Oven is an equipment which is used by bakers. So this is an asset. So a non-current asset is sold and received the cash. It's a capital receipt. Capital receipt means any receipt by sale of non-current asset. Oven is a non-current asset. So B answer is right. Here you can see capital receipt answer is B. A check received from the sale of an oven. Oven is an equipment, non-current asset. The next C1 is a discount received from a supplier. It's a revenue receipt. Then rent received from a tenant in cash. Rent received is also a revenue receipt. So cash received from sale of bread, revenue receipt. Discount received from supplier, revenue receipt. Rent received from the tenant is a revenue receipt. Only one receipt is capital, that is check received by the sale of oven. Now 22nd. What is classified as revenue expenditure? 4 options are given, MCQ. 1 answer you are right. What is classified as revenue expenditure? Number 1, the cost of maintaining a non-current asset. Yes, it is a revenue expenditure. The expenditure incurred on maintaining a non-current asset. Example, vehicle is a non-current asset. The repairs and maintenance expenditure incurred on vehicle is a revenue expenditure. So here 22nd, A, the cost of maintaining a non-current asset. Whereas B, the cost of installing a non-current asset, it's a capital expenditure. The purchase cost of non-current asset, it's a capital expenditure. The legal cost for the purchase of non-current asset, it's a capital expenditure. Only one expenditure is revenue, that is the cost of maintaining a non-current asset. Next one, 23rd, what is a revenue expenditure? Again, same MCQ, 4 options are given. Now D answer is right for this one. The cost of building an extension to factory premises. In the last video I told you any upgradation or any improvement on the existing non-current asset is also a capital expenditure. So extension of premises is a capital expenditure. The legal cost for buying factory premises. When premises are purchased, legal cost will be incurred. It's a capital expenditure. The cost of purchasing of factory premises, it's a capital expenditure. The redecorating factory expenses, redecorating a factory expenses, factory premises is a revenue expense. So D answer is right. Redecorating factory expenses. Next, 24th, again MCQ. What is the effect if capital expenditure is treated as revenue expenditure? So many times I have explained. Capital expenditure is treated as revenue expenditure. So it will affect income statement and also it will affect statement of financial position. So here 4 options. Gross profit will be understated. No. By treating capital expenditure as revenue expenditure, gross profit does not have the effect. Profit for the year is understated. Yes. One capital expenditure is incurred but wrongly taken as revenue expenditure. So profit will come down. Profit will come down. Profit will be understated. So B answer is right. Profit for the year is understated. Third, total assets are overstated. No. Then working capital is understated. No. So B answer. 25th. Which of the following is a capital receipt? Again, MCQ is given. Which of the following is a capital receipt? Discount received is a revenue receipt. Interest received on bank account, it's a revenue receipt. Proceeds from the sale of non-current asset, it's a capital receipt. When any non-current asset is sold and cash is realized, it's a capital receipt. So C answer. Proceeds from the sale of non-current asset is a capital receipt. Then sale income, that means income from sales, is a revenue receipt. Next, 26th. A trader made the following payments. Building repair $1,000, carriage on office equipment $200, extension of building $2,000, new tire for van $100, office equipment $4,000. What is the total capital expenditure? So 6 items are given. Out of 6 items, which are the items capital expenditure? We have to decide. Some are capital expenditure, some are revenue. Ignore the revenue. First, building repairs. Building repair is a revenue expenditure. It's not a capital expenditure. Then carriage on office equipment. It's a capital expenditure. Carriage on office equipment means office equipment is purchased and expenditure is incurred on bringing that office equipment. It's a capital expenditure. The first one, $200. Second, extension of building. It's a capital expenditure because it's upgradation of a non-current asset. Then new tire for van. So tire expenses is a revenue expenditure, not capital expenditure. Then office equipment, it's a non-current asset. It's a capital expenditure. So out of the 6 items, 4 items are capital expenditure. Only 2 items are revenue. Which are the 2? Repairs, building repair revenue and tire cost is revenue. Remaining carriage on office equipment, extension to building and office equipment. So remaining 3 are totally 5 items are given. 1, 2, 3, 4, 5. 5 items are given. Out of 5 items, 2 items are revenue. 3 items are capital expenditure. The 3 are carriage on office equipment, extension of building, office equipment. Totally 6,200. The answer is B. 26th answer is B. 6,200 is the capital expenditure. Now 27th problem. Which transaction is a capital expenditure? Again MCQ. 4 options are given. Decide which capital expenditure. First one, disposal of a computer. When computer is disposed of, it's a receipt, not an expenditure. So ignore. Then installing of air conditioning. Installation expenditure of non-current asset. If a non-current asset is installed, installation expenses is a capital expenditure. So B answer is right. So 27th B answer, capital expenditure, installation of air conditioning. Remaining, repairing of the building, revenue expenditure. Repairing of air conditioning, revenue expenditure. Next, 28th. Explain one difference between capital expenditure and revenue expenditure. It is asking you only one difference. We can give many differences. First difference, capital expenditure is acquiring of non-current asset. Revenue expenditure are the day-to-day running expenses. First difference. Second difference, Capital expenditure is non-recurring, whereas revenue expenditure is recurring expenditure. Third, capital expenditure will give the benefit for a long period of time. Revenue expenditure will give the benefit only for 1 year. Next difference, capital expenditure will be taken in statement of financial position. Revenue expenditure will be taken in income statement. That's it. The 4 differences just now I have explained. Next, next problem, 29th one. 29th one is MCQ. Capital expenditure is dash. The 4 statements are given. Which statement is right? First, money contributed by the business owner. When the business owner contributes money in the business, it is called a capital receipt, not capital expenditure. The first one is not the correct answer. Second, money received from the sale of fixed assets. Sale of fixed assets, money received is a capital receipt, not capital expenditure. Third one, money spent on buying fixed asset. Yes, it is a capital expenditure. Money spent on buying a fixed asset, it's a capital expenditure. C. So C answer is correct. Which one? 29th. C. Money spent on buying fixed asset. Last one, money spent on day-to-day running of the business. It's a revenue expenditure. So only one answer is right, capital expenditure. There is money spent on buying fixed asset. 29th. 30th. Explain how capital expenditure differs from revenue expenditure. Exactly same as 28th. How capital expenditure differs from revenue expenditure. Capital expenditure is the expenditure incurred to buy a non-current asset. Revenue expenditure, day-to-day running expenses. Capital expenditure will give benefit for long period of time. A revenue expenditure will give benefit only for 1 year. Capital expenditure will be taken in statement of financial position. Statement of financial position. Revenue expenditure will be taken in income statement. Right? Capital expenditure will increase the profitability of the business. Revenue expenditure will maintain the profitability of the business. These are the differences. Next, 31st, again MCQ 31. What is the effect of treating capital expenditure as a revenue expenditure? Again, 4 options. Gross profit will be overstated. No. When capital expenditure is treated as revenue expenditure, there is no effect on gross profit. There is effect is on net profit. Second, net profit is overstated. No. Because we have spent capital expenditure and we have charged to income statement. So profit will come down, not overstated. So B answer wrong. C answer, non-current assets are understated. Yes. We have incurred capital expenditure but not taken in statement of financial position. We have charged to income statement. So non-current assets will be understated. C answer is correct. Treating capital expenditure as revenue, non-current assets will be understated. C answer. Then 32nd. Again MCQ. A business purchases new production machinery. Which of the following cost will be classified as a revenue expenditure? Business purchased a new machinery and 4 options are given. We have to decide which one is revenue expenditure. First one, cost of delivery. It's a capital expenditure. Cost of installation. It's a capital expenditure. Cost of the machine. It's a capital expenditure. जब 3 capital expenditure हो गया तो last one is revenue. Cost of repair. Repairing expenditure is a revenue expenditure. So cost of repair is a revenue expenditure. Next, 33. A trader purchases a new delivery van. Which item of capital expenditure would be classified as capital expenditure? Which item of expenditure would be classified as capital expenditure? Purchase new delivery van. Now expenditure is given. A. Insurance. It's a revenue expenditure. First tank of petrol. It's a revenue expenditure. Then road license. It's a revenue expenditure. Third, sign writing. It's a capital expenditure. Sign writing is just like logo or number plate like that. It will be done only once. So sign writing is a capital expenditure. 33 completed. Now come to 34th problem. Which of the following would be regarded as an item of capital expenditure for a motor vehicle business? Business is motor vehicle business. Which is the capital expenditure? First, purchase of car for resale. It's a revenue expenditure. Because it's a motor vehicle business, they are purchasing motor vehicle and selling motor vehicle. The motor vehicle are goods. Expenditure incurred is revenue expenditure. Now, purchase of equipment for business use, it's a capital expenditure. Purchase of equipment for business use, it's a capital expenditure. So B answer. 34th B. Capital expenditure for motor vehicle business. Purchase of equipment for business use. Repair and redecoration of business premises, revenue expenditure. Road tax insurance payment for delivery van, it's a revenue expenditure. Next, 35. If capital expenditure is treated as revenue expenditure, which of the following will be incorrect? When you treat capital expenditure as revenue expenditure, which will be incorrect? Bank balance, there is no effect on bank balance, it will be correct only. Then suppliers, no change in suppliers accounts. Then customers, no change in customers account. Net profit, yes, net profit will be incorrect. If you treat capital expenditure as revenue expenditure, your net profit will be incorrect. Your bank balance, no effect. Your supplier, no effect. Your customer, no effect. Next one, 36th. So D answer, which is in here. B answer. No, which problem we are doing? 36th problem. Expenditure on improvement of fixed asset. No, 35th we are done. Now 36th. Which of the following transactions represent capital expenditure to a sole trader? So 4 options are given. Capital expenditure. Additional capital invested by the owner is a capital receipt. We have to find out which is capital expenditure. Second one, cash withdrawn by the owner. It is called drawings. It is not an expenditure at all. Expenditure on the improvement of fixed asset. It is a capital expenditure. When the fixed assets are improved, fixed assets means non-current assets. If there is any improvement on fixed assets, it's a capital expenditure. So C answer is correct. 36th C. Expenditure on the improvement of fixed assets. C bit. Next, 37th. Which statement describes capital expenditure? 1, 2, 3. 3 statements are given. Which option is correct? First, it is for an item which lasts for more than a year. Yes. When capital expenditure is incurred, it will give benefit for more than 1 year. So first statement is correct. Second, it is recorded in income statement. Wrong. Capital expenditure will not be recorded in income statement. Second statement is incorrect. Third, it is recorded in statement of financial position. Right. Capital expenditure will be recorded in financial statements. So out of the 3, 2 are correct. First and third. So answer is B. B answer is correct. First and third. It is for an item which lasts for more than a year. It is recorded in the statement of financial position. 37th or 38th. What is the effect of capital expenditure treated as revenue expenditure? 4 options are given. Gross profit will be understated. No effect on gross profit. Net profit is understated. Yes. If you spend capital expenditure and treat it as revenue expenditure, your profit will come down. Income statement will show less profit for the year. The net profit will be understated. B answer is correct. If capital expenditure is treated as revenue expenditure, the net profit is understated. Come down. Then next, 39th. Which is a capital receipt? Again, 4 options are given. First one, discount received, not a capital receipt. Interest received from bank account, not a capital receipt. Proceeds from sale of fixed asset, yes, it's a capital receipt. So 39C. Proceed from sale of fixed asset is a capital receipt. Sale income is a revenue receipt. Next, 40th. Legal cost incurred in purchase of business property have been entered in the legal expense account. When legal cost incurred to purchase the property, the legal cost should be capitalized. But here by mistake it is not capitalized, it is taken as legal expenses. So actually legal cost incurred to purchase the property, the legal cost should be included in property, capitalized. But by mistake it is taken in legal expenses, revenue expenditure. Then what is the effect of this on the financial statements? The four options are given: income statement, statement of financial position. Income statement, net profit is overstated. No, net profit is understated. So first option wrong. Second, net profit is overstated. No, again wrong. Third, net profit is understated. Assets are overstated. Ye bhi wrong. Net profit is understated and assets are understated. Yes. Because capital expenditure is incurred, we have treated it as revenue expenditure. So our profit will be understated. That expenditure is not taken in non-current asset. So that's why assets will also be understated. The right answer is D. So you can see answer D. When legal expense incurred on purchase of property, it is capital expenditure. But wrongly entered as revenue expenditure, the effect is income statement, net profit is understated, statement of financial position, assets are understated. That's it. This is 40th. Now 41. Again MCQ. Which is not a revenue expense? The four options are given which is not a revenue expense. Cost of ink cartridges, it's a revenue expenditure because every now and then we have to incur expenditure on ink cartridges. Then cost of printer maintenance, it's a revenue expenditure. Then purchase of paper, it's a revenue expenditure. Purchase of a printer is a capital expenditure. So it is asking you which is not a revenue expenditure. The purchase of printer is not a revenue expenditure. Remaining three are revenue expenditures. So answer is D. 41 answer is D. Not a revenue expenditure, purchase of printer. Now 42nd. Which is a capital expenditure for a business which sells computers? A business selling computer, which is a capital expenditure. Annual insurance premium, it's a revenue. Purchase of new computer for the business, it's a capital. Computers are purchased, definitely the business is purchasing and selling of computer. But here it is saying computer is purchased for the use of the business. It's a capital expenditure. So B answer. Capital expenditure of a business which sells computer. Purchase of new computer for the business. If the word for the business is not given, then we would have taken as the revenue expenditure. But when computer is purchased for the use in the business, it's a capital expenditure. So answer is B. Last and final 43rd. With what is classed as revenue expenditure? Four options are given. We have to decide which one is revenue expenditure. First one. The cost of maintaining a non-current asset. Already I told you. The expenditure incurred on maintaining a non-current asset is a revenue expenditure. The answer is A itself. So A answer, revenue expenditure, the cost of maintaining an item of non-current asset is a revenue expenditure. Second, cost of installing a non-current asset, it's a capital expenditure. The purchase cost of a non-current asset is a capital expenditure. The legal cost for the purchase of non-current asset is a capital expenditure. That's it. This is the end of all the short questions. Totally 43 short questions and MCQs I have selected for your preparation. I have explained each and every point. So first time itself, you may not be able to understand. So my suggestion, watch the video twice, thrice. Definitely you will get a lot of command on this topic. Inshallah, next video I'll take up the main problems on capital and revenue expenditure.